Hello there, I am Dave Van, your financial literacy plug. You may have noticed that lately I've been talking about ways of making passive income. I mentioned four that I think would be very easy to do, especially here in Nigeria. And today I will be starting with one. So today we're focusing on the stock market. What are stocks? Stocks can be explained as an investment that allows you to own a portion of a public company. Also known as equities, once you buy them, you become part owner of a big firm. Now, another term that is used interchangeably with stocks and equities is shares. But shares are actually a much smaller unit of stocks. But all three are used interchangeably nowadays. So it's usually even more common, especially here in Nigeria, to hear people saying, oh, I have shares in this company, I have shares here and there. But usually when you have shares in multiple companies and so on, then that becomes your stock. But let's not dwell too much on technical sounding jargon. I want to keep the language as simple as I possibly can. My series focuses on explaining these things in a way that the typical person will have a quick understanding of what they mean. So let me give you an example. Let's say, for instance, if a company decides to sell shares, if they decide to sell up to 1 million of their shares, and you are able to afford 100,000, that means you now own a tenth of that corporation or firm. And usually it's people who have big money that are able to make such huge investments at a time. But yeah, there are people out there who own some significant stock, in various companies that are doing very, very well. And that's why I said that it's one of the most fantastic ways of making passive income. You have all the experts, the professionals, they are already invested in making sure that their firm is returning a profit, is doing well. So you just put money into that, you sit back, and depending on what kind of company it is, you could get dividends. That is, when they make profits, they can decide to share with you either quarterly, twice a year, annually. Although I've come to realize that it's not every corporation that gives dividends, but I think quite a number of them do. Now, the first thing that will go through your mind is, why would a corporation that is big and doing well decide to share ownership with just any random person out there in the street? Usually, these corporations sell stock and equities in order to generate funds to work with, and maybe for expansion, for whatever reason, they need to get in some extra money. And when they sell stocks to the general public, that's what happens. They get money. It's like saving your money in the bank. You get this tiny profit that is so negligible that it's almost annoying if you don't touch the money at all. Yes, they keep putting in something in your savings account, but if you are using the money up, you need to let the money sit for a while for you to appreciate whatever little thing they're putting there. So in a way, it's similar, but it's always better when you do it with an established firm. You buy their shares, and because they got money from you and you are now a part owner of their company, whenever they make a profit, they give you a dividend. They share that profit with you based on the quantity of shares or stock or equity that you have with them. So that is a fantastic source of passive income. And the good thing is, whenever you're good and ready, you can sell that stock or shares, you can sell them off for a healthy sum. Usually this is with regard to long-term investing. There are people who do something called day trading. We'll explain these terms a bit later. But for people who buy the stocks of or shares of a company or firm, and then they keep for a while and study the growth of that company, some people can actually sit on their shares and just be living off of the dividends they get, which can be quite a tidy sum of money depending on how much you invested in the company. So you see somebody living what you think is the easy life, and for the life of you, you can't quite figure out how they're able to maintain this lifestyle despite the fact that they are retirees, there's pension issues. These are people that started investing some 20, 25 years ago with some very good, stable companies that have been able to weather the good and the bad times of the economy. To further buttress my point, you can buy shares, equities, or stock at, this is an example, let's say for instance 10 naira a share. Let's say you have enough money, so you put 50,000 into that at 10 naira a share. You buy that, you keep it aside, you monitor the market, you watch the trends and everything. You notice that this firm is doing well, they're growing. It is not improbable. Some firms, those shares you bought at 10 naira each, you could come back 7 months later and that 10 naira each is now 50 naira. At that point, some people are like, whoa, I'm already in need of money anyway. Let me sell. Sometimes some people will sell some of their shares and get some bulk money to put into something else they want to do, or just sell the whole thing and collect their money. Now, the thing you need to bear in mind is that while it sounds like, all sounds like sunshine and roses, naturally, you remaining happy also depends on the level of success that corporation is able to maintain. So if at some point the company collapses or is run aground either by poor management or whatever other reason, well, your money also disappears along with the fortunes of that company. And I think some 15 to 18 years back here in Nigeria, there was just such a crash of the stock market. It was so bad that people lost fortunes. Because I'm telling you about a business where there are people who literally will put 20 million in this corporation, 30 million here, 50 million over there, and so on. And when the stock market crashed, their money disappeared. But usually these are long-term investors, so they'd already gotten quite a tidy sum back, if not even covered the initial sum they put into buying those stocks before the companies ran aground. But that collapse of that year was so terrible that some people have been hesitant since then to even tentatively go back there again. Yeah, people are doing it, but those that lost massively at that time, because I had friends who were affected, that's how I know. Quite a number of them have not been able to summon the courage to go there again. Sometimes it can be that bad. What about me, you might be asking? I was lucky. I just happened to sell off practically everything I had. Because another thing I used to do was just buy what I could afford in different firms that I thought were doing well, like Cadbury, banks, breweries. So sometimes I'd have a portfolio from shares from 8 or 9 different companies. Nothing much. I'd put the odd 20,000 here, 30,000, 10,000. But when you leave it alone after a year or two, like I already explained, that 20,000 You could wake up one day and it's now 150,000. The value, because the company has been doing well. I woke up one day, I really needed a car. I'd gotten to that point in my life where I really, really needed a car. So I sold off everything. In fact, I was dealing with the spirit of regret when I did that. Only for the company, for the stock market to collapse barely a few months after I'd sold everything. So I came out completely unscathed. But not many people did. If you want to know more about how the stock market functions, about stocks, shares, and things like that, I have an article on the website that you could go there and read more up. We try to keep things simple, break everything down into layman's terms so that you can comprehend more easily what you are reading. So the article is there. And I would also advise you to stick with this channel for more on financial literacy tips. Also, remember that this isn't all I do. We don't only do YouTubing. We're also here to provide you video production services of all kinds, particularly if you are based in the FCT. Remember to continue liking, commenting, sharing, and also subscribing for those of you that are visiting the channel for the first time.